Hey TSW Forex, welcome to another episode, and in this video we're going to do chapter 3 of the free course that we have of phase 1. So we have 3 phases for those who don't know, and this is phase 1. We're going to offer that for free to YouTube. So TSW Forex free course phase 1 chapter 3. Let's get straight into it. So in this chapter we're going to discuss currency majors and currency pairs. So in currencies we have minor currencies, exotic currencies, major currencies of course, and we're going to discuss what are commodities and the different commodity classes that we have. So in Forex, the buying of one currency and selling of the other creates a fluctuation in price due to supply and demand. And I'm sure a lot of you know how supply and demand affects the market. When you buy one currency, you are buying as if you're buying a piece or a share of that country's currency. So in essence, the price value or exchange value of currency against another is a reflection of that economic condition versus the other country's economy. Currency pairs. When trading on the Forex market, you are exchanging one currency for another. Currencies are quoted in relation to another currency. Each country's currency is represented by 3 letters. So this is a currency pair, and as you can see, you have euro versus the US dollar, and that would give you a price of 1.15850, and this is just an example. So the first currency, which is the euro, is called the base currency, and the second currency is called the quote currency. So another way of reading this is 1 US dollar is equal to 1.15850 US dollars. So this is another way. So the first currency is always called the base currency, and the second currency is called the quote currency, and it's always one of the base currency is equal to whatever value you see of the quote currency. The most traded currency pairs. The most traded currency pairs are called the majors. There are 8 major currencies. These currencies are the top 8 traded pairs, are current traded currencies. Some people will consider the majors to only have 5 currencies, and the other 3 are considered commodity currencies. However, we have 8 major currencies. Okay, so these are the 8 major currencies that we have. We have US dollar, the Canadian dollar, the Great British Pound, the Swiss franc, which is CHF. We have the euro, JPY, which is Japanese yen, the Australian dollar, and the New Zealand dollar. So as you can see, we only have 2 from this continent, northern continent, US dollar and Canadian dollar, the British pound, Swiss franc, and euro from the Eurozone, and then we have the Japanese yen from Asia, and then we have Australian dollar and New Zealand dollar. So this is a graph, or should I say a chart, that is explaining how each major currency, this is just telling their name, their nickname, and the country that they're from. So the first one, of course, for the most traded currency in the world, US dollar, and this is in order of volume. This is in order of how often they are used or trade. So of course in number 1 we have the US dollar, and that is the symbol for that, as we say, is 3 letters represent each country's currency. So we have USD representing the United States of America. The currency that they use is dollar, and the nickname for the dollar is called the buck. Eurozone, and of course the Eurozone is not a country, but it's a region collective of other collective countries, a group of countries that come together and have a mutual economic zone. So we call that the Eurozone, and the symbol for that is EUR. The second most traded currency in the world, EUR, it's called the euro, and the nickname is called fiber. Third country, Japan, symbol JPY, currency yen, nickname same name, yen. Great Britain, GBP, currency pound, and the nickname is called cable. Australian dollar, AUD, we use the dollar because Australian dollar. Then the nickname is Aussie. Canadian dollar, symbol CAD. Currency, dollar. Nickname, loonie. Country, Switzerland. So we have Switzerland, they use, their symbol is CHF. The currency that they use is called franc, the Swiss franc, and the nickname is Swizzy. New Zealand, NZD, they use the dollar, the New Zealand dollar, and the nickname for that is Kiwi. Whenever a trade is placed or executed based on a specific currency pair, the base currency is what you buy or sell. When you buy the base currency, you are automatically selling the code currency. When you sell the base currency, you are automatically buying the code currency. So this is an example to show what is happening. I'm going to use this this graphical representation to explain two things: when you're buying and when you're selling, and the relationship between the two pairs. So this, whenever you're selling the euro, you're automatically buying the USD in the euro USD pair. Reason being is because you're saying 1 euro versus the US dollar, you're saying that the value of 1 euro is going to fall. And if the value of 1 euro is going to fall, then that means that the value of the US dollar is going to rise. In essence, if the euro itself lost value, then the US dollar will automatically gain value versus in this pair. So this is what the arrow means. They're always in opposites. Our currency pairs are always in opposites. They're basically fighting against each other. So when the euro loses strength, the US dollar gains strength, and vice versa. Major currency pairs. The major currency pairs have one main distinct feature, and that is they all contain the US dollar. So it's the US dollar, right? So this can either be the base currency or the code currency. So whether the US dollar is the first currency you see or the second currency you see in a pair, as it relates to the top 8 most traded pairs, so the major currencies around the world, any of those currencies along with the USD is called a major currency pair, not just any other currency with the US dollar. Any of the top 8 currencies that are traded with, which would have excluded the US dollar, making it the top 7. So the top 7 traded currencies with the US dollar is called a major pair. And these are some examples of them. You have Euro USD, which is the most popular and most traded currency pair, because of course Euro is the second most traded currency and US dollar is the most traded currency. So you have Euro USD, which the countries that are involved in that making it, this is the Eurozone versus the United States, and the nickname is the Euro dollar. You have US dollar, Japanese, or USD JPY, which is the United States versus the Japan and country, and then it's also called the dollar Japan or the dollar yen. Then you have GBP USD, United Kingdom. So of course you can see that all these currencies are the top 7 most traded currencies with the US dollar. And that is how the majors are formed. So any of them, including the US dollar, whether it be the base currency as in USD JPY or the code currency as in Euro USD. Alright, so the most traded currencies in the world, and these are the currency pairs that we are looking at. As we can see, of the whole market in the Forex market, we can see that 27% of the volume of money that is in the Forex market is for Euro USD. So that's the amount of money that is being pumped into that economy between Euro and USD. That those two pairs, the amount of times that they're traded, the amount of money that are in that pair being traded is 27%. The second, US dollar Japanese yen with 13%. British pound US dollar or the GBP USD 11%. Australian dollar, US dollar, 6%, US dollar, Canadian dollar, 5%, etc. Minor currency pairs. So let's take a look back at the 8 most traded currency pairs. So we have Australian dollar, Canadian dollar, US dollar, British pound, the Swiss franc, the euro, the New Zealand dollar, and the Japanese yen. So removing the US dollar, we already know it becomes the major pairs when you mix them with the other 7. So we're now left with the 7 pairs that are left are the Australian dollar, Canadian dollar, the British pound, the Swiss franc, the euro, New Zealand dollar, and the Japanese yen. So it can be defined as any two pair of currency in the top 8 most traded pairs that does not include the US dollar. So all those top 7 now, when they are mixed with the US dollar, you get a major. When you remove the US dollar and mix them together, you get a minor. So this is what, these are some examples. So we have the British pound, Japanese yen, GBP, JPY, GBP CAD, or GBP CAD, British pound, Canadian dollar. We have euro, or the EUR AUD, euro Australian dollar, and EUR GBP, euro British pound, to give a few examples. Exotic pairs. An exotic pair includes a major currency. Note, a major currency, and of course we have 8 major currency, and the currency of a developing country. Exotic pairs are some of the less traded pairs, which means less volume, as we already showed that on the chart, which means the spread, which is the difference between the bid and the ask price of these pairs, tend to be higher. So some examples of these currency pairs are, you have Euro TRY, which is Euro Turkish Lira, USD MXN, which is US dollar versus the Mexican pesos, and then you have the JPY NOK, which is Japanese yen versus Norwegian krone. Commodities. We're going to discuss what are commodities, types of commodities, and commodity classes. What are commodities? Commodities are objects that come from the earth, such as wheat, cattle, soybean, corn, oranges, gold, uranium, copper, aluminum, coal, cotton, and oil. Farmers, miners, investors, speculators, consumers, and strategic users buy and sell commodities for a variety of reasons. What are commodities? Continues. So we have, just like any other market, commodity markets are most effective when there is a profound and consistent liquidity. Liquidity is important as it gives the trader or the investor the ability to get in and out of trades efficiently. So we have the 2 categories of commodities. Commodities can be split into 2 categories, and that's primary commodity and secondary commodities. Primary commodity. Primary commodity is an unprocessed commodity extracted directly from natural resources. Primary commodities are non-standard, which means their quality depends on when and where they are originated. An example of a primary commodity is crude oil. So of course, it's where you get the crude oil from, or the country that you get it from, and the time. For example, maybe seasons or weather conditions affect the quality of this. So it's the primary commodity. Secondary commodity. These are products produced from primary commodities to meet market requirements. For example, the process of refining crude oil generates a range of products such as gasoline, propane, and jet fuel. So this is self-explanatory. So you have a primary product that has a variable quality based on where and when, and then when that is now processed to meet a certain standard, that's when you create the secondary commodity. Okay, so we're going to go into the classes now of commodities. So commodities can be placed in 3 main categories, and these categories are agricultural, energy, and metals. I want you guys to take notes in this section, and while you're at it, remember to subscribe, hit that notification bell, comment, share. So agricultural commodities. As food is the most important component in sustaining human life, agricultural commodities play a massive role in the global economy. The market is substantial as well, as offering millions of people employment and income in developing economies. And a list of commonly traded agricultural commodities products are cocoa, coffee, cotton, sugar, wheat, corn, oats, orange juice, rapeseed, and rice, soybean. So yeah, of course we have livestock products as well, which is feeder cattle, lean hogs, and live cattle. Those are the agricultural. Energy commodities. Energy commodities have been pivotal in motivating industrial and global growth, as both developed and developing countries' economics consume more energy. The market has been growing substantially. The oil market is larger than all metal markets combined, with crude oil being the most traded commodity in the world. So all the metal markets, gold and all those metals, which we'll discuss next, the volume of money that is being pumped into that market cannot surpass. It is way less than the oil, the money in the oil markets. So a list of commonly traded energy commodity products are Brent crude, ethanol, gasoline, natural gas, heating oil, and propane. Metal commodities. So like energy, metals have been essential in driving economic growth and industrial development for centuries. Modern day metal trading began in the mid-19th century. Then China industrial boom in the 21st century revolutionized the metal market. The London Metal Exchange, founded in 1877, is the largest metal exchange in the world. And in 2008, the average daily volume was 730,498 lots. So just to know how much volume that is, remember one lot is 100,000 units. So multiplying this by 100,000 can tell you how many units of metal is being traded. So below is a list of some of the most commonly traded metal commodity products. We have aluminum alloy, copper, lead, nickel, steel, tin, zinc, as well as precious metals or precious metal products such as gold, palladium, platinum, silver. So this is the end of chapter 3. We just discussed currency pairs, minors, majors. We discussed exotic pairs. We discussed the types or the categories of commodities and the classes of commodities. So hope that this was informative for you guys. Please feel free to subscribe, and the subscribers, thank you for supporting us. Leave a comment, tell us what types of videos you think that we should do. If we should do like reaction to Forex related videos, anything that you think you can add and let us know, or just let us know what you think about this course so far. Thank you for your support again, and looking forward to see you guys in the next video. Thank you.